Hi everyone. In this video we will discuss about the different types of investments and how you can earn a regular income from these investments. Well, investments are generally classified into two. You have long-term investments and short-term investments. Long-term investments are those which are made out for the long term. For example, investments for retirement, whereas short-term investments are those which are made to meet short-term purposes. You might want to buy a bike or a car or even finance some vacation, and so for that you make short-term investments. Well, before you take the right investing decisions, it is important to understand all types of both short-term and long-term investments, and also how much will you set apart for these investments. That is, from your monthly income, be it in the form of salary, professional income, or business income, how much will you set apart, or how much will you embark for these investments? Well, it is always suggested that you maintain a good balance between both short-term and long-term investments, because it is always nice to have a diversified portfolio. Well, the first and the most basic type of investment is fixed deposits or FDs. Definitely a best place to park your emergency funds or excess funds whenever you need them for a future purpose. So as far as security is concerned, there's no question, there's absolutely no problem. But the problem here is that FDs only give you a rate of return which does not take care of the inflation rate or is much below the inflation rate. So you get a very nominal rate of interest for any bank FD at the end of the year. To understand this, let's take an example. You want to buy a product worth rupees 100. The price of the product after 1 year turns out to be 107 after 7% inflation. To buy the product, you are investing rupees 100 in a bank FD, which gives you 5% rate of interest. And now when you withdraw the entire amount, you get 105. You still fall short of rupees 2 to buy the product. And that is why I said FDs are not the right place for investment, because as far as regular income is concerned, it doesn't take care of the inflation aspect. So you must look for investments which give you the inflation adjusted return. Well, the second type of investment is in stocks and mutual funds. Yes, definitely the best place as far as wealth creation or wealth generation is concerned. But the fact here is that the value of these stocks and mutual funds are always fluctuating because the market is quite volatile. Regarding the returns, yes, you get both capital gains when you're trading in them, as well as good amount of dividends. So if you're a beginner in this type of investment, then I would suggest that you draw out a list of those companies which have done fairly good in the last 10-15 years in the market, because it would be these companies which should still pay you the right amount of dividends. So stocks and mutual funds are definitely an asset class which is much better than the other classes as far as regular income is concerned, because they pay you both capital gains as well as dividends. So the next one are bonds. Bonds are quite interesting. These are debt instruments which are issued by the government. There could be even companies, both public and private, issuing these bonds. They are otherwise known as bond issuers. We investors, you and me, we invest in these bonds, purchase these bonds, and we get in return interest, otherwise known as coupon rate, which is attached to this bond. The coupon rate could be both fixed and fluctuating. So it is something like FDs, where you get a fixed rate of return if it is government backed or if it is a fixed coupon rate bond. You even end up getting higher rate of returns when it is floating rate or when the company is performing well. Slightly risky, because if the company is not performing well, your return diminishes. But if you are in the floating rate scheme and the company is doing quite well, as far as bonds are concerned, you could end up getting a higher return in terms of interest. The next type of investment is a mighty one, that is real estate investments. Well, if you have the capital required to buy a particular building, be it both commercial or residential, and you can let it out and earn a monthly income in the form of rent, then this is a good type of investment. In addition to your rental income, you can also earn a certain percentage in the form of capital appreciation, because the property that you purchase would definitely appreciate, be it by 7%, 10%, or even 12%. To understand the yield that you receive in a particular year, let us take an example. Let's say that you let out a property which you purchased for 90 lakhs a few years back. You let it out now and then you get a monthly income, a rental income of 30,000 rupees. So in a year, you are bound to get 3,60,000 rupees. Your rental yield in terms of percentage would be 3,60,000 rupees divided by 90 lakhs, which comes to 4%. But this is less than the inflation rate. But wait, like I told you before, you also tend to get a certain percentage in the form of capital appreciation of the property that you purchased way back then for 90 lakhs. So together it might cross say 10 or 12 or 15%, which is quite good. And this is definitely above the inflation rate, making it a good source of investment. And if you don't have the capital required to do so, then you can think of investments in REITs or real estate investment trusts. These are trusts which further invest in properties which are quite expensive, be it both commercial or residential, and they pay you a portion of the rent to the extent that you made investments by buying these REITs. So you can buy REITs at a normal price and earn rental income without much outflow of any capital. Well, the next type of investment is Public Provident Fund or PPF. Definitely a good avenue for investment because this fund is backed or supported by the government. So again, as far as safety is concerned, just like your FD, it is quite safe. There's a 15-year lock-in period from the time you invest, and after this, you can take back your PPF amount in the form of partial withdrawal or full withdrawal. So the return that you get from the PPF is quite good. It is 7 to 8%, and as of today, it is standing at 7.1%, which is quite good. And this almost beats the inflation rate. And therefore, this type of investment is quite good when compared to a fixed deposit. The last type of investment that I would like to discuss would be unit-linked insurance plans or ULIPs. ULIPs generally has two benefits or two advantages. One, out of the total premium that you pay on a yearly basis, a portion of it goes towards your life cover, in other words, towards insurance, and the other portion goes towards investments in market linked instruments, be it bonds, debentures, stocks, mutual funds, etc. So, unlike stocks and mutual funds, ULIPs give you two benefits. That is, from the investment that you make, one portion is diverted towards life cover and the other towards investments in market linked instruments, whereby you get return in the form of capital appreciation and dividends. Well, I hope I was able to make things clear through this short video. If you like the video, please do show your support by hitting the like button and subscribing the channel. Like I said before, there's a need to understand in detail about both long-term and short-term investments before you take the final call. And as far as investing is concerned, nothing can pay off more than educating yourself. So doing the right amount of research, analysis, and groundwork is very important for you to take the right investing decision. Thank you and have a great day.